Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Thursday, the 16th of October. I'm Daniel Lam, your host for the podcast. In a number of client meetings yesterday, the clients asked me about Powell's latest comments and what to make of that. So Powell said in his most recent speech that this policy stance, which I see as still modestly restrictive, leaves us well positioned to respond to potential economic developments. Now, restrictive policy is shorthand for interest rates that are high enough to restrict the economy to the extent that it limits inflation. So in this context, Powell is saying that the Fed has ample room to be cutting interest rates without risking stimulating inflation. He sees that weaknesses in the labor market is outweighing concerns about stubborn inflation. But now the dilemma comes. If Trump were to dramatically ratchet up the tariffs on China, that is likely to be stoking fears of the return of inflation. And how is the Fed going to be cutting rates if you have renewed concerns about such? So, as we spoke about in a podcast this Monday, China had timed their move in restricting rare earth exports when they sensed the quote-unquote impossible Trinity that Trump is facing, i.e. issuing counter threats of raising tariffs on China, soothing the slowing US economy, and having the Fed to cut rates without fear of the return of inflation. So therefore, over these few weeks, we are quite almost certain that there will be some kind of dialogue or serious commitment to dialogue between the US and China to close up on their differences. Yes, the positioning is stretched in US equities at plus 1.75 standard deviation from the average level. And thus, we may see some further consolidation in US equities, but it would most likely be mild unless we get some real deterioration in the US earnings, which we are not seeing at the moment. The S&P 500 would probably be quite well supported in the 6,250 to 6,400 area. For Hong Kong China equities, the Hang Seng Index is hovering around the 26,000 level, and probably going to be trading within the zone of 25,000 to 26,000 in the near term, waiting for further cues in the development on macro events. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.